Here is a summary of the Vertex Pharmaceuticals, VRTX, Q3 2025 earnings call, focusing on key financial metrics, management forecasts, risks, highlights, lowlights, and important statements from the CEO and CFO, suitable for reading aloud. Vertex Pharmaceuticals Q3 2025 earnings call summary. Good evening, everyone. This is a summary of Vertex Pharmaceuticals' third quarter 2025 financial results conference call. The call featured remarks from Dr. Reshma Kewalramani, CEO and President, Duncan McKechnie, Chief Commercial Officer, and Charlie Wagner, Chief Operating and Financial Officer. Overall performance and key financial metrics. Vertex demonstrated strong performance in Q3 2025, reporting total revenue of $3.08 billion, representing double-digit growth of 11% year-over-year. This growth was driven by continued strength in their cystic fibrosis franchise, contributions from new product launches, and expanding global reach. Revenue breakdown. U.S. revenues saw a robust growth of 15% year-over-year, fueled by strong patient demand, favorable net pricing in CF, and contributions from Alyftrek, Casgevy, and Journavx. International revenue grew 4% year-over-year, with mid-single-digit growth in CF and contributions from Casgevy. Specific product contributions to Q3 global revenue included $17 million from Casgevy and $20 million from Journavx. Operating expenses. Combined non-GAAP R&D, acquired IP R&D, and SG&A expenses were $1.28 billion, a 19% increase year-over-year. This rise is attributed to the advancement of their late-stage pipeline, particularly the acceleration of povetacicept programs, and the build-out of commercial capabilities for Journavx. Acquired IP R&D expenses were $55 million, up from $15 million in Q3 2024. Profitability. Non-GAAP operating income stood at $1.38 billion, a slight increase from $1.31 billion in Q3 2024. Non-GAAP net income was $1.24 billion, up from $1.14 billion in the prior year. Non-GAAP earnings per share, EPS, reached $4.80, a 10% increase compared to $4.38 in Q3 2024. Cash position and capital allocation. Vertex ended the quarter with $12 billion in cash and investments. The company deployed approximately $1.1 billion to repurchase over 2.7 million shares in Q3, and over $1.9 billion year-to-date. Capital allocation priorities remain focused on reinvesting in the business through internal and external innovation and growth, followed by share repurchases. Management's forecasts and guidance. Vertex updated its full-year 2025 financial guidance. Total revenue, now expected to be in the range of $11.9 billion to $12 billion, representing approximately 8% to 9% growth for the full year. This is a slight increase from prior guidance. The outlook incorporates continued CF growth, over $100 million in Casgevy revenue, and further contributions from Journavx. Operating expenses. Refined guidance for combined non-GAAP R&D, acquired IP R&D, and SG&A expenses is now approximately $5 billion to $5.1 billion. This increase is primarily due to accelerated povetacicept development and increased commercial investments for Journavx. Tax rate. The expected full-year non-GAAP effective tax rate is lowered to 17% to 18%, down from 20.5% to 21.5%, incorporating one-time tax benefits, including those from the Alpine acquisition. Key pipeline and product highlights. Cystic fibrosis, CF Alyftrek, continues to show strong uptake, particularly among naive patients and those switching from Trikafta. It offers improved CFTR function, broader mutation coverage, and once-daily dosing. The company expects the majority of global patients to eventually transition to Alyftrek. Trikafta. Pivotal study results for the 1 to 2-year-old population were remarkable, showing unprecedented sweat chloride reductions and bringing nearly 70% of patients to normal levels. Global regulatory submissions are on track for the first half of 2026. VX-828, the most efficacious next-gen CFTR corrector in vitro, has initiated its CF cohort. Data disclosure is anticipated next year. Pain franchise, Journax, continues to gain momentum with over 170 million lives having reimbursed access. Broad adoption is seen across physicians and pain types, with significant reductions in opioid use reported. The company is expanding its sales force and engaging in consumer awareness initiatives. Over 300,000 prescriptions have been filled. Kidney disease portfolio. This is a key area for future growth. Povetacicept IgA nephropathy, IgAN full enrollment in the Rainier Phase 3 trial is complete, marking the fastest enrollment for a contemporary Phase 3 IgAN study. Breakthrough therapy designation and rolling review have been granted by the FDA. Submission for potential accelerated approval in the U.S. is expected before the end of this year, with potential approval in the first half of 2026. POV offers a convenient subcutaneous auto-injector for at-home, once-monthly administration. Primary membranous nephropathy, PMN. The pivotal Phase 2 of 3 adaptive study, Olympus, is underway. POV is the only dual BAFF/APRIL inhibitor in pivotal trials for multiple kidney diseases. Inaxaplin, APOL1-mediated kidney disease enrollment for the interim analysis cohort of the Amplitude pivotal study is complete. VX407, ADPKD Phase 2 proof-of-concept study has been initiated. Other pipeline. Zimislecel, type 1 diabetes enrollment in the pivotal trial is complete, but dosing has been temporarily postponed due to an internal manufacturing analysis. CEO and CFO statements. Dr. Reshma Kewalramani, CEO, emphasized Vertex's strong Q3 performance, driven by double-digit revenue growth and diversification across products and geographies. She highlighted progress across all 3 long-standing CF goals, the rapid advancement of the kidney disease pipeline, particularly povetacicept, and the company's commitment to bringing transformative therapies to patients with serious diseases. Dr. Kewalramani also stressed Vertex's differentiated R&D approach grounded in causal human biology and validated targets. Charlie Wagner, CFO, detailed the financial results, showcasing robust revenue growth and EPS increase. He provided updated full-year guidance, emphasizing the company's confidence in its growth trajectory from its existing portfolio and upcoming launches. He also reiterated the company's capital allocation priorities, focusing on reinvestment in innovation and growth, followed by share repurchases. Significant risk factors. Forward-looking statements. The transcript includes forward-looking statements that are subject to risks and uncertainties, and actual outcomes could differ materially. Regulatory approvals and timelines. While progress is being made, regulatory approvals and timelines for new drugs are subject to agency review and potential delays. Manufacturing. The temporary postponement of dosing for Zimislecel due to internal manufacturing analysis highlights potential manufacturing challenges. Market access and reimbursement. Continued success relies on securing broad payer coverage and favorable reimbursement across all markets. Competitive landscape. The pharmaceutical industry is highly competitive, and Vertex faces competition in all its therapeutic areas. Key takeaways and future outlook. Vertex is in a strong position, with Q3 2025 demonstrating consistent financial performance and significant pipeline progress. The company is successfully diversifying its revenue streams beyond CF, with new launches gaining traction and a robust pipeline in kidney diseases poised to become a major growth driver. Management expressed high confidence in their ability to continue delivering innovation and growth in the coming years. This concludes the summary of Vertex Pharmaceuticals Q3 2025 earnings call.